Good afternoon, ladies and gentlemen. I am Wakatsuki, co-president of NPHD. Thank you very much for taking time out of your busy schedule to join us today. I will now explain Nippon Paint's medium-term strategy and our roadmap as asset assembler. Mass media are also invited to attend this briefing. Thank you very much for your kind attention. First is executive summary. We significantly surpassed the original guidance set out in our previous medium-term plan, developed and announced in March 2021, which aimed for sales of 1.1 trillion yen, operating profit of 140 billion yen, and EPS of 45 yen in 2023. During the past 3 years, we faced a very difficult external environment, including COVID, which basically continued until late 2022 to early 23, chip shortage in the automotive and many other industrial products, supply chain disruptions, conflicts in Ukraine and other regions, soaring raw material prices due to inflation, and a property recession in China. Despite these challenges, we were able to achieve strong growth thanks to the robust market demand from our business characteristics, the strength of our brand with top market shares, and the associated price flow-through, as well as our strong track record of continuous build-up of high-quality M&A deals. Once again, the source of this strength lies in our asset assembler model. We aim to compound low-risk and sustainable EPS by assembling not high-profile but solid companies, demand autonomy and accountability from the capable management teams of such excellent companies, which in turn maximizes the potential of these assets. There is no way we, as co-presidents, know how to sell paints in Australia, China, Turkey, and other regions. On the other hand, I believe that we can judge whether the heads of those regions and businesses are quick to react, committed to results, and delivering those results in a changing business environment. Wee-Soo Kim and I are board members of NIPSEA and Dulux Group. In the Japan segment, Wee-Soo Kim leads the management meeting of each operating company. I chair the board of directors of Dunn Edwards. This form of governance helps to unlock the potential of each asset. To be honest, I do not think this model should be applied to all companies, but as our business is low risk and has a stable revenue base, I believe it is the most efficient and effective model. In the previous medium-term plan, MSV remained the sole mission. But it was not until 2022 that we started claiming to be asset assembler. We have been working on this evolution since April 2021, when Wee-Soo Kim and I were appointed co-presidents, including the separation of functional companies in Japan from holding company in 2022. While individual assets will continue to have a 3 to 4 year medium-term plan, we thought presenting a 3-year target number on a consolidated group basis has diminished in significance in order to give a correct understanding of our potential, including the continuation of M&A. I would like to present the growth potential of our current portfolio once again and explain our medium-term strategy to give you a more correct understanding of our thinking. This page shows our company profile as a recap. We are 143 years old and have expanded from 18 countries and regions 10 years ago to 47 today. We continue our 62-year partnership with our current major shareholder, Woodrum. Revenue and market cap have changed dramatically from 10 years ago, which is a phenomenal growth for a Japanese company with a 143-year history. Looking at our history a little more closely, it can be divided into 4 main periods, namely, the founding period from 1881, partnerships in Asia from 1962, the consolidation of Asian joint ventures in 2014, which saw sales increase from 250 billion yen to almost 600 billion yen, and that was the beginning of the globalization. However, we consider 2018 to be a major inflection point. A shareholder proposal by the Whitlam Group back then led to a major change in the BOD composition. We set MSV as the sole mission of the management and focused on low-risk, high-profit, decorative paint-oriented companies in subsequent M&As. We accelerated our growth while achieving our long-held goal of full integration of the Asian JVs in 2021. The next few pages will hopefully help you understand the essence of asset assembler model. So if you could bear with me for a little while. Asset assembler is about sustainable EPS compounding through organic and inorganic initiatives. There are still many low-risk and good return assets globally, and Japan-based advantage are likely to persist, which include not only low interest rates, but also the consumer trust in Japanese brands. The ability to maximize the potential of assets acquired this way will accelerate organic growth, which in turn will attract new assets. And I believe the upside to shareholder value is infinite through this cycle.
アップサイドは無限であるというふうに考えています。
Next, let me explain our competitive edge as an asset assembler. Low interest rate will be a common advantage for any Japanese company. First of all, we have the power and will to leverage that advantage. On the other hand, while maintaining a small headquarters, we are capable of finding low-risk assets and acquiring them at appropriate valuation and compound numerous assets by attracting talents with autonomy and accountability. A group of such capable talents, without the holding company's instructions, is eager to leverage the group's resources. Now here is an example which shows our mindset. A lot of investment banks say that our North American business is weak, or it is strategically important, and they bring in various proposals. Indeed, Dunn Edwards is small in the huge North American market. But in the market around the West Coast, they have sustainable growth and revenue. So there is actually little necessity for new acquisitions. Our agenda is not to become number one in the US, or in the global market, but it is to maximize the shareholders' value. Even if North America is an attractive market, we take into account the valuation and risks of acquisition. Otherwise, it would be against the MSV concept. In that regard, current portfolio isn't perfect, but it would not cause business stagnation in certain region or company, even if we didn't do anything. Basically, our companies can generate cash in self-sustaining manner, and we are a group of companies that can make sustainable contribution to EPS. For instance, we decided to repurchase Indian business because it is in the same state. Based on such mindset, in medium term, as shown at the bottom right of page 10, we guide for 8 to 9% annual growth of consolidated revenue of our existing portfolio and 10 to 12 annual EPS growth. At the same time, as shown in the bottom left, we aim for M&As that can grow EPS safely and sustainably. If low risk and good return, regardless of region, business, and size, we will be able to grow EPS and there is no limit. This is not only for the 3 years, but we will improve short-term performance every year and aim to realize MSV in longer term. Now that we have shared our basic mindset, I would like to look at the big picture of how we will actually grow EPS. Page 12 shows the track record of our actual EPS after deducting special factors, just for your information. For instance, in 2019, we exclude the impairment loss in the EU and the marine business, provision in China in 2022, and the impact of IAS 29 in Turkey, which will help you look at the strength of our business at cruising speed. On the other hand, from 2021, we acquired 100% of our joint venture and we issued new shares equivalent to approximately 46% for the business we acquired in Indonesia. Since 2021, dark blue shows 51% of NIPSEA, and light blue shows 49% of NIPSEA, and green shows Indonesia, and they are making contribution to EPS, which is more than enough to offset the impact. On page 13, this is the first time we are presenting our cash generation power in each region. From the operating cash flow after tax, we subtracted the regular capex excluding M&A. In fact, in 2023, we reinforced cash conversion cycle, which is the KPI, in many regions, which led to strong cash generation. Going forward, maybe not as much as in 2023, but I think we can maintain this cash generation structure in each asset, excluding M&As. On page 14, I would like to talk about the operating leverage effects. If we take the paints business as an example, in the basic model structure, variable costs account for approximately 50% of revenue, although it may differ by regions. And fixed costs 35%, and that will result in operating margin of 15%. Normally, compared to growth, fixed costs and capex don't increase as much. If we grow at 8%, operating profit would grow by 16% in this case. However, profit doesn't grow this much in reality because inflation may cause fixed costs to increase as much as revenue growth. We may also strategically allocate the excess margin to advertising, promotion, incentives, and choose to maintain the profit margin. Until we gain dominance, such investments are important. And even after we have gained dominance, we may still need to invest depending on the competitive environment. Given such circumstances, in our model, if we quit investing, it is easy to improve the margin. Well, I wouldn't say it is easy, but it is possible to improve the margin. But I hope you'll understand that we don't believe that will contribute to longer-term MSV.
As an evidence of the safety of our assets, this shows that while individual events can occur in our broad portfolio, as a whole, we are steadily generating results. It is an extremely volatile environment. We were forced to revise down our guidance in 2021, mainly due to the sharp rise in raw material prices, and again in 2022, mainly due to provisions in China and hyperinflationary accounting in Turkey, but basically achieved the original guidance. I think we can also see that we are, in a sense, steadily exceeding our original guidance for 2023 when such unexpected events declined. Now, under such circumstances, although EPS is steadily increasing, the stock price is not rising very much, which means that it is difficult to say that the PER is currently maximized. There may be several reasons for this, but in addition to the usual concerns about China risks, I believe that our growth potential, even organic, may be underestimated. Today, we are once again trying to spread the understanding of our thinking, our model, and our track record to gain an understanding of the growth potential in our current asset portfolio and our approach to M&A, and then to reassure investors about the certainty of EPS compounding from M&A that we will implement in the future, recognizing that it is difficult to include this in the model. We also hope that investors will understand our company's future as an EPS compounder, a machine that accumulates EPS through enhanced dialogue and enhanced disclosure materials. I believe that this is the best way to achieve this. We would like to continue to actively seek feedback from our investors. One word on the structure to support EPS compounding. When we launched the co-president system in April 2021, many people asked whether the system would really work, but we no longer receive such questions. The close communication between we, who has a rich operational background, and I, who specialize in capital markets and M&A, and the common decision-making axis of MSV, coupled with our egoless personalities, have enabled us to take various actions without delay, or rather with a considerable sense of speed. I think our strength lies in the fact that we are able to operate based on a common and sole axis of decision-making, MSV, and maintain very close communication with the major shareholders who are aligned with minority shareholders and the board of directors, of which the majority are independent directors. From here, you can see on page 19, we present our medium-term growth forecasts for each of our assets in the sense of where we see the margins heading. In fact, there is no change from what we have been communicating so far. In China, which has been a concern for many of you, we believe there is strong demand, especially for repainting, and that continued growth is possible by leveraging our brand to increase our market share. Page 20, please. Here is our growth forecast relative to the growth forecast for each market. Market forecast on value basis, including volume. For example, in China, where demand is strong in terms of volume, but lower in terms of value. In other words, lower priced products are growing. Due to the economic environment, we are forecasting 10 to 15% growth in value terms. Of course, I cannot talk about the specific targets on inorganic growth, but let me share with you our line of thinking. Recently, I have often been asked, are you PMI focused and taking some time off from M&A? The answer is no. In fact, there are quite a few deals that we have considered and declined. The advantage of being an asset assembler is that as a result of acquiring excellent assets, we avoid standardization and focus on unlocking the potential of the assets. So we are able to continue with the next round of M&A, and in fact, we are still considering them. The chart itself is taken directly from last year's integrated report, so I will not go into details, but in a nutshell, it shows that our M&A model allows for a continuous EPS compounding through valuation and funding mix based on the assumption that the target is safe and excellent.
I have always said that we prioritize debt financing in our funding, but if we can expect sufficient EPS growth, it is also an option to issue new shares. However, based on current share price or PER level, issuing new shares is becoming less attractive, and we need to pay even more attention to the valuation of target companies. Having said that, I will come back to this point later, but in short term, the leverage level is declining, and we have enough financial strength, including our cash generation. Thus, we will continue to explore M&As which will contribute to MSV. Now let me discuss sustainability. The principle is that our MSV is based on the assumption that we will be fulfilling our obligation to our stakeholders, including legal, social, and ethical obligations. We believe various sustainability initiatives must be linked with MSV, and they per se should not become the purpose. In order not to be top-heavy, we choose the leaders of the 5 teams from the leaders of our partner companies. We utilize the asset assembler platform, and through cross-functional activities, we pursue technology and talents. We fulfill our duties regarding environment and human rights in order to pursue MSV. On page 25, we introduce examples of our technological innovation strategy. We develop technologies and share know-hows across regions. For instance, we develop EV coating technology. We utilize bio-based resins. We carry out initiatives that will contribute to solving social challenges as well as generating revenue. Page 26 gives examples of our HR strategy. Since we split the domestic business in 2015, we have kept a company of 200 billion yen in size for the Japanese segment, and we have pursued autonomy of 5 business companies. As a result, accountability of each business has improved, but we have also faced multiple issues such as rigid allocation of human resources and organizational silos. Rather than spending additional cost pointlessly, we have been attempting to realize total optimization by increasing the number of concurrent positions, for example. We have already had a CTO who supervises technological talents in the Japan segment, but we will take a step-by-step approach to shift to unified operation, starting from sales, resin development, and production. Regarding finance, as you saw, in 2023, our revenue and cash conversion cycle improved, which led to significant increase of cash generation, resulting in decline of net debt over EBITDA to 2.2 times by the end of 2023. In the past 3 years, cash generation was approximately 370 billion yen. 120 billion yen was allocated to capex, 80 billion yen for dividend, and 300 billion yen for M&A. Through funding, net debt has increased, but EBITDA has also increased, so even when considering our business characteristics, we are in the safety zone. The finance strategy will largely remain the same. Our strength is sustainable EPS compounding. We will generate cash, which will be used for M&A to ensure future growth so that we can repay our shareholders. Are we not going to do share buybacks? We do receive this question. It's true that the current share price is not at satisfactory level, but are we going to spend the precious capital to repurchase shares at 21 to 22 times PER? Or are we going to aim for acquisitions of more affordable businesses? Because we anticipate sustainable growth in the future, I would say it is out of our consideration as of today. Going forward, we will always pay attention to the market situation and we will consider various possible options. For each asset level, we have set a precise KPI. However, in our asset assembler philosophy, we never ignore the local circumstances to decide one single target for the margin or cash conversion cycle. Still, each company will maintain growth and make improvements. That is the mindset of their management. When we are then seen as a group, we would be much stronger than just going after one common target. Last but not least, here is the conclusion. Again, MSV is our sole mission. MSV is maximizing shareholder value. We will leverage the advantage of our platform as an asset assembler. We will go after short-term growth, but our policy is to seek long-term maximization of EPS, and this will remain unchanged. Organically, we will pursue maximization of the potential of our assets. In terms of M&A, we will look at the balance between risks and valuation. Both shall contribute to compounding of EPS, and such track record and fostering of appropriate expectation will help us maximize PER. I believe you now understand why we chose not to announce a 3 or 5-year plan, which is typical for Japanese companies. Our potential is at a different dimension from such framework. At the same time, we believe that we are more than fully aware of the importance of communicating with the market. We will continue to hold this kind of opportunities, and we will be engaged in individual dialogues as well. This concludes my presentation, and now let me take questions. Thank you for your kind attention.